Welcome back to the best pro for you trading floor. Today we're looking at Bitcoin. We'll look at it a couple of weeks ago, if not mistaken. So buckle up because we are heading into one of the most volatile weeks of the year so far. We have the FOMC meeting tomorrow. Actually, the meeting starts today. The rate decision is tomorrow. And massive big tech corporate earnings as well right now. Magnificent Seven like Apple, Amazon, Meta. Add to that the ongoing US-Iran tensions keeping the Strait of Hormuz closed and energy prices high. All of this is driving a flight to the US dollar. And as the US dollar, of course, strengthens, assets like Bitcoin are taking a hit. A couple of weeks ago, we did actually nail the long position on the way up, but the structure now has changed. So starting, of course, as always, on the daily time frame, then we're going to go to down to the 4 hour and the 1 hour. The setup over here is a little bit clear, right? We do have a double top. Okay. And this isn't just a price double top at 79.60 or so. It's also an RSI double top. There is like over here. You do see also this divergence from the peak to that peak. You see? So that is an indication of an incoming correction, pullback, full reversal. Who knows? But it looks more like a pullback, to be fair, which we now see taking place. Now, if we do take the Fibonacci tool all the way up to the top, we're going to see that we do have a cluster at the 38.2 at 74K, which is also where the median line is. Typically, we test the median line, then, of course, things change. But here's the important thing. If we lose the 74K, then we are looking for a major sentiment test down to the 50 Fibonacci, which is a 72.25 or so. Let's just bring this a little bit over. Now, I'm not sure how much you know about double tops, but if we go down on the 4 hour, we're going to have a little bit more context and more clarity about what's happening. So with double tops, typically what happens is that we need to use the bottom, okay? Because essentially we have a breakout and an invalidation of a double bottom here, right? We do use that to measure the range of the formation entirely. And we use the 100 Fibonacci extension from that breakout level, right, to project where this could actually head towards. And look at this. This is a 74.40 or so, which comes quite close to the 74K at 38.2. So typically what I'm saying is what happens is that we actually use the neckline of the double bottom and we use the measurable projection to forecast where prices could go. It's not like we're going to get an equality to the 100. It's not a standard, but it's typically something that traders are looking at. The 61.8, the 100, perhaps even further extensions. Okay. What else we can notice here? We can notice a divergence more vividly over here on the RSI. Okay. And obviously we also had that divergence. So we are facing a double RSI divergence currently on the 4 hour. We actually are in the aftermath of that. Okay. And momentum is pulling now down towards the 30 oversold level. Okay. And this is actually kind of lining up with the previous bottom at 65K, let's say, because that's the last time we were oversold on the 4 hour. So going long here, you know, because some might just still think that this is going to shoot higher, might be a trap. I think the better opportunity for today is, if you wanted to, for today, is actually either sitting idle and waiting for the events that we are expecting, which are quite a few, to be fair, or for those who are a bit more risk takers, going short now or a little bit higher, and I will explain why. Or the better scenario, I think, is just to wait to see the 74.50 zone being revisited again, have a double bottom here, at least initially, and try to get into a bounce at least. So down on the 1 hour, of course, we are seeing, let me just take this off since we've already spoken about these levels. We are seeing currently a divergence, right? But the reality is that we also see that all of the bands, all of the lines of the Bollinger Bands are looking down. And that was the first move to the downside. We had the first rejection, okay? Then secondly, we didn't even have a rejection. So it is probable that this divergence is going to create a shorter move to the upside towards the 76.50, which is a strong support, swing support. It might be retested to resistance, or even to the median line at 76.70. Once we do see that, that might be a better opportunity to go short. Okay, and you know the target and the stop could be just a little bit higher up than the upper band or above the previous swing high. So it's still a good opportunity. But the reality is that, again, this is for intraday trading rather than anything else. The structure, okay, of the 65, it remains still impulsive. Typically, when we have impulses like this, and that's a double top here, right, we do actually correct anywhere between 38 and 61.8. And if in the longer term we turn higher, then that could essentially be the bottom, which we have been waiting for a while. Now, for best prop for you traders, any dead cat bounce, kinda, because it could be considered as a dead cat bounce. Currently, given that we have actually had two quite big major slumps on the 1 hour towards the middle band, or even testing the neckline again, who knows, which is at 77k, is probably a better opportunity to short, and we'll go targeting the 74k or so. For the bulls, stay patient, wait for the dust to settle from FOMC, not just the FOMC. You've got ECB, you've got Bank of England, you've got the situation in the Middle East, and also you've got a lot of Magnificent Seven earnings, AI related, most of them. And you know, if guidance fails, and that will be the focus, not just earnings beat, then we could be looking for a sentiment retest down to the 50 even, you know, at 72.20 or so. So trade safe, protect your funded accounts, and I will see you in the next breakdown.